November read on Producer Price Index, up 0.1% on headline. Many were looking for unchanged. You strip out the all-important food and energy, we're definitely above expectations at up 0.3%. And if you look in the rearview mirror, the up 0.6 and up 0.5 respectively of October are unrevised. If we look at the trade number month over month, that's up 0.3, better than expected. Final demand, 2.5%, exactly as expected, although 0.4 less than the 2.9 from October. And if we look at year over year, ex-food and energy up 2.7. This is interesting. This is 0.2 hotter than we were looking for, and it's 0.1 hotter than our last look. Ex-food and energy trade year over year also a bit on the warm side at 2.8, though it is sequentially equal to the 2.8 in the rearview mirror. So the PPI data is warmer than expected, maybe not as warm as it was last time, all things considered. And we know how that turned out. The CPI is really the consumer price tomorrow, maybe more important. But these are the last glimpse into the world of what the FOMC committee will be dealing with next week when they decide most likely to raise a quarter point. Many believe 2019 and 2020 changes and market perceptions have been rather robust. 2020, you could argue, is pricing in maybe an ease. 2019, virtually nothing. We'll have to see. It's nice to see that the smoke signals work, even in their impaired, corralled state with all the securities central banks hold. Joe, it's all yours.
All right, I was going to bring something up, but I don't know if I want to start it, really.
Oh, bring it up, Joe. Come on, bring it up.
Former Fed Chair Yellen says excessive corporate debt could prolong a downturn.
Yeah, I noticed that, too. Yeah, that got my ire up a little bit. You know, they push everybody into this aisle marked risky assets. They push us all in. They close the door.
Concerned.
And then years later, they say, boy, this could prove to be a problem. I'm with you, Joe.
The arsonist is concerned about how to put this fire out. So what are we going to do?
Yeah. The arsonist arrived in this big red truck with hoses all over it. I understand.
What's that? Why are you looking at Steve?
Because that's the only reason I brought it up. But thans,
Rick.
Steve
By the way,
Liesman,
now the president wants to keep interest rates down. So
actually, I was looking at Steve, but thanks for bringing it to. Anyway,
Good morning, Joe.
Good morning. What do you think?
I think that's an issue, and I think it's something the Fed thought about. And I don't know if Rick's still there, but the idea was that they would address it through the macro-prudential. Remember that term?
Yeah.
You're looking at me like you're...
No, let's forget it as quickly as we can. It was a dumb term. They bit off more than they can chew. Let's hope that the new dentures in place will chew much smaller morsels.
And also, Rick, just so you know, Yellen was also saying last night that the Fed lacks some of the tools to address the next financial crisis, and she is worried about one.
That's what Tim Geithner said when I talked to him last week.
Same thing.
Very concerned.
Same thing.
I think the Fed is full of tools.
You could argue that, Joe. It's... You know, folks, I make the mistake, close up on me now, of taking Joe seriously. Right. And it's like I'm Charlie Brown here, because whacking at the football, falling on my butt. Can I talk about the PPI for a second on the Fed?
Okay, if you want, but then will you argue with Rick?
Rick and I don't have an argument, although, here, let me just do the PPI real quick, which is that Mike was arguing earlier today about the transport stocks. And Joe, for many, many years, you've been using transports as your leading indicator.
I told you
I learned that from you.
My biggest worry is that when the transports go down with oil at 50, that makes me wonder about the oil.
It should be good for transports.
Well, it makes me wonder about the oil story.
Let me give you some information here, which is that transportation warehousing costs went up by 1.2%, which I think dovetails right with Santelli's idea, which is that they're having a margin pressure problem.
It fits with the idea that it's a very high friction area of the economy right now, and a lot of the burden of getting everything to everyone immediately is falling on UPS.
And they have to eat that because they make the promise.
Infrastructure and FedEx. Yeah.
They make the promise to get you the present, and they have to deliver it no matter what. Well, somehow, for some reason, their costs go up 6.2% year over year. And I don't know which part of that is it the transportation part or the warehousing part. I thought these were great stocks because they were going to deliver every present in America.
Or maybe it's inventory loading as well, right? Did we see an inventory bulge? And,
also, a 1.3% pop in food prices. And I am looking for, but not always able to find, because I'm not sure how to find it, whether or not there's any tariff costs in this PPI. It's a place where it would show up. on the books or the prices paid by wholesalers. It's not entirely clear for me looking at this. I will tell you, energy is down 5%. Goods are up down 1.1%. So I don't know if it's there, but we do know we have a hotter PPI. We'll have to look at it later to see if it's in there.